Bitcoin's monetary policy, fixed supply and inflation resistance. What makes Bitcoin special? Bitcoin operates with a fixed supply of 21 million coins, a rule set by its protocol and unchangeable without the network consensus. This means no central bank can print more money unlike the Indian rupee, US dollar or the Nigerian Naira, which central banks can expand, often leading to inflation. Bitcoin supply decreases over time through halving, which happens every 4 years, reducing new coin issuance and making it deflationary, which helps preservance of value. How it fights inflation. Inflation erodes money's buying power, and Bitcoin's fixed supply resists this. For example, the Indian rupee lost 80% of its value since 1947 with 5.5% inflation in 2023. The US dollar saw 3.1% inflation in 2023, while the Nigerian Naira faced 22.2% inflation as per trading economics. Bitcoin, with no other new coin beyond the 21 million, grows its value as demand rises, offering a shield against such losses. Comparing Bitcoin with India, US and the Nigeria. From 2023 to 2025, Bitcoin's price is increased from $27,000 to $83,000, a 207% nominal increase adjusted for inflation. US dollar. With 6.09 total inflation, Bitcoin's real return is 190%, while holding dollar loses 6% in value. Comparing it to the Indian rupee, with 12.36% inflation and exchange rate depreciation, Bitcoin's real return is 188% versus rupees 12% loss. Nigerian Naira. With 44% inflation, Bitcoin's real return is 192% with Naira's 44% drop. In India, with 25 million Bitcoin users by March of 2025 and 5 billion in remittances, it saves 6.2% in fees as per worldbank.org. In Nigeria, high inflation drives Bitcoin's use, with trading volumes up 300% in 2023 as per localbitcoins.com. The US is institutional adoption, with $50 billion in Bitcoin ETF by 2025 as per Bloomberg.com. Now, let us make a detailed analysis of Bitcoin's monetary policy, fixed supply and inflation resistance. Bitcoin's unique monetary framework. We will have an in-depth exploration of Bitcoin's monetary policy, focusing on its fixed supply and resistance to inflation. Bitcoin, launched in 2009, operates on a decentralized protocol that caps its total supply at 21 million coins, a stark contrast to traditional currencies like Indian rupee, US dollar and the Nigerian Naira, which are subject to central bank policies that often lead to inflation. This analysis highlights Bitcoin's advantages, particularly in the context of India, US and the Nigeria, using statistical data projected as of March 2025. Bitcoin's deflationary nature, driven by halving events every 4 years, position it as a robust store of value, offering a hedge against devaluation seen in fiat currencies. Understanding Bitcoin's fixed supply. Bitcoin's fixed supply is cornerstone of its monetary policy, determined by its algorithm and unchangeable without consensus from the entire network, which is practically impossible given its decentralized structure. As of March 2025, approximately 19.6 million Bitcoins have been mined, leaving 1.4 million to be released over the next century, according to blockchain.com. This scarcity is facilitated by the halving mechanism, where the reward for the mining new blocks is halved every 4 years. The most recent halving is 2024 reduced the reward from 6.25 to 3.125 Bitcoins per block, tightening the supply further. This contrasts with the traditional currencies. The Reserve Bank of India increased the money supply by 11.5% in 2022-23. The US Federal Reserve expanded by $4 trillion in 2020, and the Central Bank of Nigeria printed Naira amid 22.2% inflation in 2023. This is according to tradingeconomics.com. Inflation resistance. Bitcoin's shield. Inflation erodes purchasing power and Bitcoin fixes supply resistance. Bitcoin's fixed supply resists by ensuring no additional coins dilute its value. Let's compare its performance to from 2015 to 2025 with INR, USD and the Naira using projected data for 2025. US dollar. Bitcoin's price was approximately $300 in 2015. By March of 2025, it reached around $83,000, which is inflation of 27,633% as of 2015. US inflation from 2015 to 2025, assuming 3% annual average, totals to 34.39% over 10 years as per bls.gov. Adjusting for this, Bitcoin's real return remains exceptionally high, far outpacing $34.9% loss in purchasing power. In 2023, US inflation was 3.1%, and with 50 billion in Bitcoin ETFs by 2025 per Bloomberg.com. Institutional adoption underscores its value. Indian Rupee. In 2015, Bitcoin's price in rupees was approximately 24,000 rupees. By 2025, it has reached approximately 77 lakhs, a nominal return of more than 30,000%. Indian inflation at 6% annually totals nearly 90% over 10 years as per rbi.org.in. Despite higher inflation, Bitcoin's real return is significant, especially as the rupee lost 80% of its value, with 5.5 inflation in 2023. By March of 2025, India has 25 million Bitcoin users with 5 billion in remittances, saving 6.2% fees per as per the worldbank.org. Nigerian Naira. In 2015, Bitcoin's price in Naira was approximately 59,000 Naira. By 2025, it went up to 5.2 million Naira, a nominal return of 88,500%. Nigerian inflation at 20% annually totals to nearly 670% over 10 years as per tradingeconomics.com. Despite 22% inflation in 2023, Bitcoin's real return is robust, with trading volumes up 300% in 2023 amid hyperinflation per localbitcoins.com. The deflationary nature of Bitcoin. Bitcoin supply isn't just fixed, it's deflationary due to halving events. In 2020, the halving reduced issuance from 12.5 to 6.25 Bitcoins per block. In 2024, it came to 3.125 per block. By 2025, new issuances will be under 0.8% annually. While demand grows with 81 million global wallets as per glassnode.com. This contrasts with fiat. India's money supply grew at 11.5% in 2022-2023. The US expanded by $4 trillion and Naira printing fueled 22.2% in 2023. Real world impact and adoption. Bitcoin's inflation resistance is evident to high inflation rates. In Venezuela, with 1,700% inflation in 2018, Bitcoin trading volumes spiked 300% as per local Bitcoins. In Nigeria, Bitcoin offers a store of value while adoption rising. In India, despite RBI's resistance, there has been $5 billion in remittances in spite of all the problems. The US sees $50 billion into ETF by 2025, and soon it is going to be the crypto capital of the world. Addressing concerns and counter arguments. Some argue Bitcoin's volatility undermines the store of status, but this dropping from 80% to in 2018 to less than 40% today is showing maturation. Others cite environmental concern, but with increasing renewable energy, its carbon footprint is reducing. In India, with more than 190 gigawatts of renewable power, Bitcoin mining can be used as a sustainable source of energy. Critics might say central banks stabilize economies, but Bitcoin is decentralized. Inflation resistant nature offers parallel systems, especially in crises like India's 2016 demonetization or Nigeria's 2023 currency float. Bitcoin's transformative potential. In conclusion, Bitcoin's fixed supply and inflation resistance makes it a game changer for preserving wealth, especially in India, the US, and Nigeria, where fiat currencies face devaluation. With projected real returns of 190% for the US, 188% for India, and 192% for Nigeria from 2023 to 2025. Bitcoin outshines traditional options. Its growing adoption, 81 million wallets, underscore its future. As trust in fiat wanes, Bitcoin's monetary policy offers a decentralized, inflation-proof alternative, reshaping finance for the better.